Financial statements are some of the most important documents when it comes to the business of your Sertoma Club. Unfortunately, they're also among the most misunderstood. As a leader in your club, it's your fiduciary responsibility to ensure that your club is consistently and accurately communicating its financial results to members, donors, government agencies, and any other required stakeholders. In today's presentation, we'll begin an overview of the most important statements and reports your club should and must maintain to keep its legal status. We'll also dive into your responsibilities as a board member to help you better understand your role and responsibilities. Here is a guide to your club's financial statements. Before we begin, we must understand why reporting is even important in the first place. In short, it's because it's legally required. It ensures that your club is meeting obligations to the public and providing transparency to your donors by communicating how funds are acquired, managed, and allocated to accomplish your club's goals, according to the American Society for Association Executives, or ASAE. It also fulfills the requirement of stakeholder communications, which aim to keep your members and other required entities informed about your financial position, accomplishments, and shortfalls. As a reminder, while many of the financial statements are like those used in for-profit business, there are some important differences, and you must act and plan accordingly. Your club is a nonprofit service organization, not a professional for-profit business, and your members are best served when leadership remembers this. There are 6 different types of financial statements. These include the Statement of Financial Position, Statement of Activities, Statement of Cash Flows, Statement of Net Assets, Statement of Functional Expenses, and Annual Reports. Both the Statement of Financial Position and Statement of Activities are typically required of all clubs. The Statement of Functional Expenses may be used by some of our larger and more active clubs. If there is another entity ran by your club, like a clinic or separate 501c3 charitable program, you may also want to consider releasing a public annual report. Let's look first at the Statement of Financial Position, or SOP. In the for-profit world, this is known as the balance sheet. This statement offers a financial overview of your club at any given point in time. Its goal is to help you monitor your club's financial risk and sustainability. It's typically prepared at the end of each fiscal year, but some clubs may opt to do it on a monthly or quarterly basis. The SOP is made up of 3 main components: assets, liabilities, and net assets. Assets include cash and cash equivalents like grants received or depreciable physical property. Liabilities are your payables and debts. Finally, net assets, which are known as equity in the for-profit realm, are the leftover assets once you have taken out your liabilities. The accounting equation shown here, says Nonprofit Knowledge Sharing Community Mission Box, demonstrates that your club has the financial resources on hand to at least equal its outstanding debts. One financial asset we have not covered yet is donor contributions. These are part of your net assets and should be accounted for separately in the SOP based upon one of 3 categories: unrestricted, temporary restrictions, or permanent restrictions. Funds with temporary restrictions would be something like a grant or donation given with donor stipulations on how or when the funds must be used. Permanently restricted donations would include endowments. Unrestricted donations are those that your club receives that are without a specified cause or timeline. Next up is the Statement of Activities, or as it's sometimes known, Statement of Support. Our for-profit accountants may know this as the income statement. This required financial statement offers revenue, expenses, investment results, and other gains and losses like the sale of property or equipment. It's often best to distinguish between operating and non-operating activity to keep things appropriately clear. The report should also show the resulting change in net assets for the financial reporting period, says ASAE. We'll look at the types of revenue in a moment, but let's talk a little bit about expense items your club may not consider. When your club receives donated goods or services, it must also accurately report any associated expenses. For example, you might have utilities to cover at a donated meeting space or storage fees for a donated trailer. If, for any reason, your club has donations related to museums, make sure to notify your CPA to ensure that it is documented properly, as special rules apply here and they can be difficult to understand for pedestrian treasurers. Just like donor contributions on your club's SOP, There are going to be times when you need to distinguish between types of revenue. Temporarily restricted revenues are those that come in within a specific time period, like a year, but are restricted from immediate use. Endowment donations and some other designated financial gifts may never be applied toward operation and are therefore identified as permanently restricted. Endowment interest income is also reported with the appropriate restrictions. All other revenue would fall into the unrestricted category. The statement of functional expenses is something that may be used by larger clubs to identify its expenses in a detailed manner. This is usually presented in a table or matrix by function, which is the purpose of the expense, like program, service, or funding activity, as well as by nature, which encompasses the economic benefits received, like salaries or rent. The financial statement of functional expenses is designed to give a snapshot of the balance between operations and funding programs. It's important to keep in mind that costs may be spread across multiple categories, and therefore may require supplemental breakdowns that show proportional allocation. The annual report is another optional financial statement that some clubs may elect to release. In fact, your national Sertoma organization releases one each year. This document is used to communicate an organization's health in better detail. It will highlight noteworthy accomplishments and outcomes like attendance numbers, important fundraising benchmarks, club achievements, and more. The report may also offer donor recognition, such as a list of donors by giving level. It's also a good idea to summarize program activity and highlight volunteer support. If done right, the annual report will inspire mission support, attract donors, and give transparent accountability to your stakeholders. There are a couple other financial statements that some nonprofits may use. The Statement of Cash Flows shows major uses and sources of cash during a given reporting period. This includes operating, investing, and financial activities. The Statement of Net Assets reconciles the changes in the net asset classifications as reported in the organization's Statement of Activities according to ASAE. These classifications are those with donor restrictions and those without. Many nonprofits choose to simply include this information as part of its summary of activities. A quick note on management reports. While financial statements help us to better understand our club's overall financial position, it's not what's typically used to run the organization on a weekly or monthly basis. Instead, we rely on management reports to help us to make informed decisions. Popular management reports include our budget versus spending report that may be broken down by program and/or department to help us monitor stewardship of our limited resources, explains Accounting Services Company Growth Force. There are also those reports on unit economics, which show the true cost to provide services, and the cash flow forecast, which help us to plan for the future. So now that you understand the differences in these financial statements, what are your responsibilities as a club leader? First and foremost, you must familiarize yourself with the statements. Even when you're not the one responsible for preparing them, it's your fiduciary duty to do your due diligence and review them routinely and in a timely manner. As you review them, you should keep an eye out for any patterns. Where is your club succeeding and what isn't performing quite as well? Does your asset versus liability ratio make sense? Do your payables and receivables seem consistent over time? Have you seen unexpected growth or losses in club investments? Pay attention to these things and make decisions that will ensure that your finances are strong and where they should be. You should also keep an eye on the club's liquidity. Do you have enough cash on hand to meet your liabilities? Financial statements should provide quantitative and qualitative information that illustrates the funding availability to meet general expenditures for at least 1 year in the future. Ask questions. If you don't understand something, it's your responsibility to have it clarified. Keep track of the budget. Make sure that you're properly monitoring costs and expenses without micromanaging. Finally, don't forget to look for new revenue sources. Examine your existing ones and keep an eye on rising costs that may impact how your club does business. A few other tips for your club. Summary dashboards are a great way to make this information readable and accessible for your team. Many softwares provide customizable options that make this simple. Financial statements are a crucial part of strategic financial planning. Hold each other accountable for reading these reports so that you can make well-informed and thought-out decisions together as a board. Follow your established policies. These financial systems should be in place and followed in order to protect your club. And finally, monitor your funding on a monthly basis minimally. The board, especially if you have a finance committee, should examine reports to help you identify your needs and where you might want to focus your efforts. The primary role of a board is to ensure the viability of the organization through sound strategic, governance, and financial planning. This can only be accomplished when we have and utilize the information we need to make decisions. This includes our financial reports. We hope that you will use today's presentation to familiarize your leadership team with its duty of care within the club. As always, you can learn more about this topic and many others in the training library, which is available anytime in the Member Center at Sertoma.org.